Welcome to GRE. I'm your host, Keith Weinhold. New York City real estate is just absurd. It's also really interesting and has distinctions and quirks that you'll find almost nowhere else in the world. It's almost weird. We're talking about air rights, skyscrapers, apartments with doormen, co-ops, rent control, and how do you actually make money in New York City real estate today on Get Rich Education. With JWB Real Estate Capital, Jacksonville real estate has outperformed the stock market by 34% over the last 20 years and has proven to be a more stable asset, especially during recessions. Their vertically integrated strategy has led to 79% more home price appreciation compared to the average Jacksonville investor since 2013. JWB is ready to help your money make money, and they make it easy for everyday investors. Get started at jwbrealestate.com/GRE.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE. From Jamaica, Queens to Lower Manhattan, across New York City and across 188 world nations, this is Get Rich Education. I'm your host, Keith Weinhold. As we're talking about New York City real estate today, I think it can be regarded as exotic. And when we think about Manhattan, that is the center of American urban excitement, from Times Square to the Statue of Liberty to the address One World Trade Center, and so many more places. And it wasn't always this way. As the story goes, in 1626, so about 400 years ago, indigenous inhabitants of the island sold off the entire island of Manhattan to the Dutch for a tiny sum, just $24 worth of beads and trinkets. And at that time, it wasn't known as New York, it was called New Amsterdam. Well, today, New York City is the national or the world capital of banking, finance, communication, advertising, law, accountancy, fashion, arts, architecture, media, and more. The national or the world capital of all those things. I mean, how could so much be in one place? And all of this attracts a lot of people. In fact, the New York City metro area population last year was almost 19 million. That includes the city and suburbs. And that's up just about 1/4% from the previous year. Okay, so the health crisis from 3 years ago has not killed it. You know what this means? This means that more than 1 in 18 Americans live in the New York City metro. Mind-boggling. Now, of the 5 boroughs, we're really focusing on Manhattan today. We're doing that because that's where space is at a real premium, and hence that's why all of the tall skyscrapers are there. In fact, I have counted 17 skyscrapers that are all more than 1,000 feet tall. That's almost 1/5 of a mile tall. These are super skyscrapers. And now Manhattan is crammed with such a high density of people and buildings. And it's not just commercial space, because of course residents live in Manhattan too, but it is so crammed for space in Manhattan that people are almost living on top of each other. And even in places of the 4 outlying boroughs, it's that way too, such that it can kind of obscure your vision such that you don't have, I guess, the wherewithal that you would elsewhere. And here's what I mean. Just last month, I met a guy that has lived all of his life in New York City. Part of his life was in Brooklyn, and the other part of his life was in the Bronx. He didn't even realize that when he lived in Brooklyn, he was living on an island. I don't know how long he lived in Brooklyn, but I found a gentle way to tell him or to say without making him feel unintelligent that yes, when you were living in Brooklyn, you're actually living on Long Island. Both Brooklyn and Queens are there. That's why you have all those bridges in New York City, like the Brooklyn Bridge. They connect the islands. Now, when it comes to rental property there, New York State has had the longest history of rent control in the United States since 1943, and the majority of those units are in New York City. Now, I have never in my life seen one good piece of evidence that rent control works long-term for society. And in fact, if you have, please send that to us. Share that resource with us at getricheducation.com/contact. And of course, getricheducation.com/contact is where you can leave any feedback about the show at all. Now, when you put a ceiling on the amount of rent that can be charged like this with rent control, what tends to happen is that now landlords have zero incentive to improve the property when they can't charge more for rent and pay for that improvement, or else pretty soon landlords would be losing money. So in many cases, sooner than later, properties and entire areas can become dilapidated because they haven't been improved. And in bad cases, tenants don't want to move out. They'd like to keep the cheap rent, even if they need to tolerate increasingly squalid conditions in these neglected properties. And a classic economics book that really outlines the rent control problem wonderfully, and even though this author isn't that well known, is Henry Hazlitt's Economics in One Lesson. It really terrifically breaks down the problems with rent control. In that entire book, it basically outlines how programs like rent control, all they do is benefit a small, highly visible group of people for a short period of time. Like, oh, let's give these people a break and be nice so that they can afford to pay the rent here in the short term. And then at the same time, you're not playing nice to the property owner. And how benefits to a small group of people in the short term harms everybody long term. And a lot of people will tell you that that is the case with rent control. Now, shortly, I'll talk with an experienced developer. She's knowledgeable about New York City development. She also used to live in New York City. Wait until you discover some of the complexities of getting things built there. I expect her to share that. She'll tell us about things that you would never think of, like whether or not there are windows on the side of a building and how that indicates whether or not there's a development opportunity there. I'll have her describe what air rights are. Yeah, property air rights. They're probably not what you think they are. And you're going to need to listen closely to that part, as I do expect explaining air rights to involve some math. You'll learn about what those flashy-looking skinny skyscrapers are and why they don't build those skinny skyscrapers any wider than they are. New York City has something called co-ops. That's short for cooperatives. They are different from a condo. In a co-op, you buy shares in a corporation that gives you certain occupancy rights. And so rather than you having fee simple title, you are the shareholder of a corporation rather than having a title like you do with condos. That's how a co-op works. And you've got to give the co-op board your income and your taxes because the board, that corporation, they want to be sure that you will be able to pay. And if the co-op board doesn't like your dog or doesn't like what you wear or for whatever reason, then maybe they won't let you join the co-op. If you're perusing apartments to rent in New York City, especially Manhattan, some might have a doorman and some don't have a doorman. So we're going to talk about why it might be desirable to have a doorman when that's not even offered in a place like, say, Minneapolis or Houston. And I'm going to ask our guest, is there any way that you can make some real estate cash flow here in New York City? So I'm often the one doing the teaching here on the show, but in just a few minutes, I expect to get some learning myself as we discuss the unique and unusual nuances of New York City real estate. Hey, first of all, how long have you been listening to the GRE podcast? How long have you been listening to this very show? Well, that was a recent question in our Instagram poll. Now, the sample size wasn't that huge, and, our average Instagram follower, they might be a more avid podcast fan than the average. But with the question that was asked, how long have you been listening to the GRE podcast? The poll results were under 1 year. That group was 11% of respondents that have been listening for that length of time. Between 1 and 3 years, 32% of you. 3 or more years, 43% of you have been listening for that length of time. And every single episode since 2014, yes, that is all 437 episodes. In this poll, I learned that comprises 14% of you. So that's about 1 in 7 listeners here, at least in this poll, have listened to every single show. I am indescribably grateful for that. And to shout out a sampling of those that have listened to every episode, that includes Kirby, Jacob, and Stacio. I'm deeply grateful for that. I still learn of people that find the show here today, and once they do, they soon want to go back and listen to every single episode. That is just humbling indeed. New York City real estate is absurd. That's next. I'm Keith Weinhold. This is Get Rich Education. GRE listeners can't stop talking about their service from Ridge Lending Group and MLS 42056. They've provided our tribe with more loans than anyone. They're truly a top lender for beginners and veterans. It's where I go to get my own loans for single-family rental property up to 4plexes. So start your pre-qualification and you can chat with President Chaley Ridge personally. They'll even deliver your custom plan for growing your real estate portfolio. Start at ridgelendinggroup.com. Mid-South homebuyers, with over 2 decades as the nation's highest-rated turnkey provider, their empathetic property managers use your return on investment as their North Star. It's no wonder smart investors line up to get their completely renovated income properties like it's the newest iPhone. Headquartered in Memphis with their globally attractive cash flows, Mid-South has an A+ rating with the Better Business Bureau and 4,000 houses renovated. There is zero markup on maintenance, let that sink in, and they average a 98.9% occupancy rate with an industry-leading 3.5-year average renter term. Every home they offer you will have brand new components, a bumper-to-bumper 1-year warranty, new 30-year roofs, and wait for it, a high-quality renter in an astounding price range, $100,000 to $150,000. Get to know Mid-South. Enjoy cash flow from day one at midsouthhomebuyers.com. That's midsouthhomebuyers.com.
This is Hal Elrod, author of The Miracle Morning, and listen to Get Rich Education with Keith Weinhold, and don't quit your daydream.
Today's guest has been an entrepreneur, business strategist, and hands-on manager since 1980. She worked on Wall Street during the early 80s, and then she worked within the Wall Street Financial Services Sales Organization for Digital Equipment Corporation. She pioneered the use of artificial intelligence to create the first credit scoring system, which later became FICO. Later, she founded a software development company for startup companies in Silicon Valley. She is an angel investor, board member, and a personal advisor to founders, CEOs, and government officials. Today, she has real estate development companies in both the U.S. and abroad. She's developed properties in really about every asset class I can think of, including premium and infill residential and coastal residential communities, medical office, retail, and more. She built the largest resort and residential property in the fastest growing Caribbean nation, Belize, and she delivered the first ever major hotel brand to that entire nation. That's Curio by Hilton. That is one impressive body of work. And there's even more than that, but I think that's enough now. It's been several years since we welcomed on to Get Rich Education, Beth Clifford.
How are you today?
Hey, I'm excellent. And I have walked properties in person with Beth in one of her developments, and she is a rather impressive real estate visionary, is really what I'll call her. And I met her years ago through the real estate guys, Robert Helms and Russell Gray. Check out their show of the same name or realestateguysradio.com. Beth today has personal residences in both Maine and Belize, but she's this real estate visionary, and she's a former New York City resident. And Beth, of all the the world's real estate, I would say New York City is a place I'm rather enamored of. Now, I've never owned real estate there, but I've done a lot of the Manhattan touristy stuff, from the Empire State Building to Rockefeller Center at Christmas time. The last hotel that I stayed at was in the Tribeca section of Manhattan. I even ran the New York City Marathon through all 5 boroughs one time. But why don't you pull back bigger picture and just give us an overview of what makes New York City real estate different from most American real estate?
First of all, Keith, thank you again for having me on. It's been a while since I've seen you, so thank you. And I'm an avid listener, so I feel just humbled to be invited back on. So thank you so much, Keith. Appreciate it. New York is, first of all, the density makes it very different, and the prices and the scale of everything that goes on in New York is very, very different. I want to kind of frame this conversation more about Manhattan than necessarily the 5 boroughs, because Manhattan is an animal all unto itself, because basically the entire island has 0 lot line zoning throughout. And so it's a very different animal when you've got such density inside of a small geographic area. And then how do you go create an efficient and planned community on this island, correct? And so how do you go do it? And so the zoning laws are some that are probably the most complex in the United States as to what development rights are in the city of New York. And then just once you get through just the development and the entitlements and what you can do on that land, and then just to think about what it takes to go build in a working city, correct? Where there is no lay down space. I mean, it is incredibly complex. There is a person who I know personally who said that Donald Trump had said, they had approached Donald about how difficult it was to become president of the United States. And he said, actually, building my first hotel project in New York City was harder than becoming president. And I think that's probably could not be far from the truth, Keith.
Now, you mentioned 0 lot line zoning. I think of 0 lot lines as zoning where properties will immediately abut up against each other, and there's 0 open space in between the 2 buildings.
That's correct. And so if you look at them, so let's just take a walk. Many people have, I'm sure, are familiar of walking down Fifth Avenue, correct?
Yeah.
And yes, there is an open space in the front, which is a sidewalk. There may be some setbacks from the sidewalk. So you may see some open space or garden area or courtyard potentially from the sidewalk into the building itself. But then if you go and you look at the buildings, they're directly touching each other, correct? So they can't put a sheet of paper between the 2 buildings from a side to side setback. So there's 0 side setbacks. Now, there may be rear setbacks, and it depends on the different areas that you're in. Many of the buildings have 0 setbacks on the rear. So that's what I mean by 0 lot line. And so then it becomes, when you have 0 setbacks between 2 buildings, how do you then arbitrate between those 2 boundaries, particularly when one is being built in a different time frame than another's, because you may want to put windows in them, correct? So if you are the front of the building, yes, you're going to need to have windows and doors and ingress and egress into the building from the front, possibly from the back. But now, how do you legislate the access and windows on the sides of the buildings? And that's what comes through with development rights and what some people call air rights, but they're really called development rights, which is now, how do we arbitrate between landowners that abut each other as to what they can do between the 2 buildings? And that's what becomes very interesting in New York real estate.
So we've been talking largely about horizontal spaces and 0 lot lines there. You mentioned air rights. So there is such a high density of population and infrastructure and buildings in Manhattan that we're talking now about constraints and rights on the vertical space, since most of the building that you're doing is up. It's more vertical construction in Manhattan than it is horizontal construction. And air rights, that's the sort of thing that we just don't deal with in many markets. So can you tell us about air rights when it comes to this vertical construction?
So let me contrast it maybe with what things may be single family residences. So single family residences, if you were to go into the zoning of, say, a single family residence in Florida, and it will have a zoning code, correct, Keith?
Right.
And it may be that this lot has to be, the minimum size of the lot is a quarter of an acre. Let's just say that it's a quarter of an acre.
Classic suburbia.
And classic suburbia. So the lot itself has to be a quarter of an acre. And then when you start reading the zoning rights inside of it, it might say, well, there's a height restriction. So we only allow 35-foot buildings within this area. So 35 feet would be absolutely no higher than 3 stories,
Right.
correct? So you couldn't do it more than 3 stories. It may also have side setbacks and a front setback. You have to leave 15 feet on either side of your building that isn't being built on, correct? All of that is part of the zoning code. But inside of that zoning code, it will say something about typically what the building height is going to be. Then tells you, well, what is the volume of the building that I can go build? So if I look at the setbacks and the size of the lot, then that tells me what my built upon area is. And then with the height restriction, it starts to define for me what's the maximum size of the building envelope that I can potentially build on this property. And then we all know that real estate, and particularly the value of land, is based on what your development rights are, which is what is the volume of the actual product that I can put on the ground. So how much, and we call that floor area ratio. You will see it sometimes called FAR. People will call it FAR. You may see the initials as FAR, but what that means is what is the floor area ratio? And this is what happens in New York City. For instance, you can go into New York City and you can buy a parcel of land. The normal average lot in Manhattan is 25 feet wide and 50 feet deep. That's a normal Manhattan lot. What's the square footage of that?
1,250 square feet.
1,250 square feet. It will then tell you what the floor area ratio is. So let's make it easier. And let's just say that 1,000 square feet. So it'd be easier for our math. Is that okay?
Yeah.
So let's just say that we have a 20 by 50 lot in Manhattan. And then I'll go and I'll look at the zoning for it. And it will tell me that my floor area ratio in some areas is as high as 15. So what does that mean? I can build 15 times as much as the size of the gross square footage of the lot. So that means I can build 15,000 square feet of building volume. Does that make sense?
Yeah.
So now all of a sudden, now imagine that you have one lot on one street that is zoned with a 15 FAR versus another lot that has a 6. Which of those lots is worth more?
Probably the 15.
Absolutely correct, because I can build more on that lot than I can on the other. So if I'm looking to go put office space, if I'm looking to go put if I'm looking to go do a mixed use, if I'm looking to go do a multifamily, whatever you're looking to go put on, it means that yield of that land is now higher because the floor area ratio is higher than another piece of land. So now all of a sudden the value of land is based on the yield of the actual square footage of the building that can be built on the land itself. Now, here's what becomes interesting is if you walk around Manhattan, and I always find this interesting because I'll walk around and you'll go down and you'll look at the Tiffany building. The Tiffany building is, I don't know, let's just say, I think it's about 10, 12 stories.
I've been inside it.
Okay. Right across the street from it is Trump Tower, which is 70, 80 stories, correct?
I don't remember, but it is taller.
Somewhere. It's tall. So let's just agree that it's taller than the Tiffany building. They potentially both have the exact same floor area ratio on them, but each of them were built at a different time. And that zoning changed during that time. And so that it could have been at that time that the floor area ratio for Tiffany's at time was 10, and that now it's actually gone up in that zoning area to where it may be a 15 or larger. So as you walk down the street, what's always very interesting to me is to go look at tall building next to a shorter building, and then look at the side of the building and to see if there are windows on them. And it's an indicator. The indicator is if the newer, larger building has no windows on the side of it, then it is being sympathetic to the zoning of the shorter building that still has air rights available to it. So that is why when you build a larger building today and you build it and you do not put windows on it, then you know that there are existing air rights potentially on the abutting property. So I always look at them and I'm like, that's a potential development opportunity because the newer building was built sympathetic to the potential density of the abutting property. None of us look at that when we walk around in suburbia, correct? We don't look at that and we go, oh, look at that. There's actual, correct? That they don't see that there is a potential of vertical development based on the lack of infrastructure or the lack of windows of the sides of buildings, correct?
Yeah, you need to have an eye for that. I just learned something. The next time that I'm in Manhattan, that's something that I can look out for. So we're talking about building and air rights in Manhattan. I think a lot of people, Beth, they think of air rights as, well, there's a building that's built, just say it's 20 stories tall, and that means that no one can build anything out over the top of your 20-story building. Some people think that that's what air rights are. Does that have anything to do with air rights?
No, it isn't, because really air rights is really misleading, because really what it means is the development rights. And it goes back to the original discussion that I had. Yes, because absolutely not. You cannot buy an abutting property and then go up and build the vertical that you want to, and then do a 90-degree L and put it over the top of another building. Like, that is not what air rights means. What air rights means is really the development rights on the vertical about exactly how high can this building go. How large buildings get put together in Manhattan is that they aggregate and they combine the adjoining abutting air rights of other buildings in order to put it onto their parcel of land. And so they buy those air rights. And those are huge worth, because you're basically buying whatever the land is. And so you're taking that value of the land and monetizing the air that you yourself were not going to be building on and selling it to somebody else.
Monetizing the air, that kind of puts real estate on its head when we think about real estate. It's something real here in a figurative sense. And Beth, really, we're talking about tall buildings and skyscrapers here in Manhattan. And something that's been rather flashy and visual with tall buildings, a trend that's taken place, is the construction of all these really skinny skyscrapers, a lot of them that I see close to Central Park. Can you tell us about the skinny skyscraper trend and why you wouldn't build those wider, for example?
The skinny skyscrapers, many of them call them the pencil buildings.
Yeah.
And so there's a couple of things that came about. Why pencil buildings? And I'll tell you what my opinion is about why pencil buildings exist. Number one, when premium real estate, like along 57th Street in Midtown Manhattan, started to approach more than $10,000 retail per square foot.
Gosh.
It's a big number. But when it started to approach that number, and when you start thinking about what the cost of the land is, plus the cost of the infrastructure to go build the buildings, it started to allow you to look at higher buildings where it's very expensive. The higher you go up, the more structure you need to have, which is the more infrastructure and core in the building that has to be used for the structure, which isn't part of livable square footage. So there's a whole structural engineering part that needs to be managed as far as the pro forma needs to be. But when your retail price gets to the point where it can absorb those expenses, it then became another thing that got invented during this time is the double and triple car elevators. And so if you notice now is that when you go into 90, 100-story buildings, you don't get into an elevator that takes you to the 100th floor. So you'll have an elevator bank that's going from 1 to 40, exit from 40, and 40 will go to 80, 80 will go to 100. And so you'll have the different elevators and the elevator technology that allowed for multiple elevator cars within the same passageway made it less expensive and an easier way to transport these people within the building itself. Because imagine what you would need as far as all of these elevator cores, correct? To go take everybody up and down. And if you had to have an equal column height so that all of them are going to the 100th floor, it becomes very inefficient because you've got your lower floors having to go have that core. Does that make sense? And so you end up with the cores of the elevators take away from your usable, sellable square footage of the actual building plate itself.
Wow, that is really interesting. I never thought about that before. The premium for space in Manhattan, including in some of these skinny skyscrapers that you're talking about, makes for a more narrow elevator shaft, I'll call it, such that I might need to take 3 elevators if I'm on the ground and I want to get up to my apartment on the 100th story of a skyscraper.
That's correct. And so that you end up with them moving what's in it, because you've got to look at the exterior of the building is considered your floor area ratio. What it's filled with is up to the mechanics of what the building needs. And it needs to have pedestrian access up and down. It needs to have fire code stairwells up and down. Even though it's 100 floors, there still has to be fire rated stairwells. And then you've got all the utilities that you need to bring in. So can you imagine the water pipes, the pressure pumps, everything else it needs to do? So if you go take a quick look at what's known as the Pencil Building in Manhattan, it's right over on Park and 57th, which is one of the original Pencil buildings. But if you look at it at night, or if you look at the outside, you can see that about every 18 floors is actually a utility floor. So there's a floor that has, no one's paying for that floor, but that's where all of the pumps and everything else. So there's a lot of logistics that has to go into these Pencil buildings. But what made them economically feasible is that the retail price of the square footage became such a price where it could bear the cost of the land and it could bear the cost of the infrastructure that goes inside of the building. Plus, the new technology with elevators made it where it was financially possible to go pencil those types of buildings. And hence, the Pencil Building.
Yeah, we've been talking about this trend of skinny skyscrapers, also known as pencil buildings in Manhattan. I know some of those rent and sell for really exorbitant prices in those skyscrapers because a lot of them have these commanding views of Central Park and just the entire island and the outlying boroughs beyond Manhattan. So they're certainly selling for a premium. Some well-known people live inside these pencil buildings, one of the trends that we're seeing there in building in Manhattan. Now, when a tenant goes to rent an apartment there in Manhattan, sometimes there are amenities that they are seeking that you wouldn't seek elsewhere. For example, one of those nuances is a doorman. Presumably, it can fetch more rent if the building has a doorman. Can you tell us more about the doormen in Manhattan apartments, what they do, what size building you might begin to see a doorman amenity in?
Typically, you're going to see them in, larger buildings, maybe that have at least 50 units or larger. It can be smaller. There can be small, very upscale townhouse or larger buildings that may have a doorman to them. But here's the thing about New York, which is everything is a challenge in New York. In that, just imagine that you've got to go get groceries in New York. You've got to go and you've got to bring it back. I'll use a term in New York, which is you have to go schlep everything. You've got to go everywhere to go get it. I mean, so you don't have a car to go run around and do like you do. You don't go to Costco there, correct?
Right.
You don't just go in your car, go to Costco, go buy the 5 pounds of pickles and bring them back to your house. And, space is at a premium. Shopping is more difficult than it is typically in the suburbs. And you're working and it's harder in New York. And so a doorman has a lot of benefits. One, security. So they're obviously going to be stopping and making sure that whoever comes into the building has a right to come into that building. They're going to call up and make sure that if you have guests that they'll be taken care of. And so there's a sense of security over the building. The other is that they're going to take care of all of your packages and your Amazon packages and your food delivery, and that if you do get Costco to come deliver your 5 pounds of pickles, then they'll go take your 5 pounds of pickles and make sure it gets up to your building and your unit as well. So there's people want it, because absent of that, where do you have everything delivered to you? And if you've got a 4-story walk-up apartment, then that means your Amazon packages are going to be left on the doorstep of your Manhattan townhouse. How secure does that feel to you? Do you want your MacBook Pro dropped off on the front steps of your townhouse in Manhattan?
In Manhattan, not so much. So
So then what happens is most people have, Dropbox areas, et cetera. So then they're going to have to go make some type of an agreement. So having that is a big amenity. Having washer dryers is an enormous amenity because, how do you go do laundry? And because of some zoning and different codes and just the leaking and people not always having full-time residency in New York, whereas a lot of the real estate in Manhattan is see-through. And so, you go to the Pencil building and go look at it at night, and you'll probably only see 4 floors that are lit because so many of these buildings are second, third, fourth, 18th, 26th homes of people. And so they are investment properties. And I used a term with you earlier today, which is a pied-à-terre, like myself. When I've owned in Manhattan, it's a pied-à-terre for me, a piece of the earth, correct? Going back to the French for it, of owning a foothold on the ground. This is your 4th residence, so you're not in residence full time. And so then you need, or you would desire to have somebody taking care of your property when you're not there.
Before Beth and I got on the microphone today, she mentioned a pied-à-terre to me. I've been in real estate more than 20 years, and it is the first time that I had ever heard that term. So New York City real estate is just absurd on a lot of levels, and so much of this has to do with the confinement on space. So if you are a resident looking for an apartment, maybe you're looking for the proximity to the subway and you're searching that way more so than you're even trying to look for parking because you probably don't own a car. I know that there are platforms that residents go to look for apartments in New York City that you might not go to if you live in other places. I know that Street Easy is a popular website for New York City apartment seekers. And I learned a lot just looking at the Street Easy website the other day by looking at the top 10 filters that apartment seekers search for in New York City, and they were in-unit laundry. You spoke to the confines on the laundry there, Beth, an elevator and a doorman like we talked about, and private outdoor space, a gym, central AC, parking, and shared outdoor space. So those are some of the top filters on Street Easy for when you're searching for a Manhattan apartment, and that can tell you an awful lot about the confined space and the different nuances of New York City real estate.
It is, and because space is so much at a premium there when you think about it. The average rental, so a moderate apartment is averaging its pricing at about $70 a square foot annually, depending on where you are. So start doing the math on that. So you're at 70 times 12, you're at over $800 per annual rent is what it's going for. That's on like a triple net with your own utilities. So think about the pricing of what you're getting into for real estate.
When we talk about rent amounts, we think about rent control, a ceiling on which a landlord can set the rent. Tell us about rent control in Manhattan.
I'm probably not the best person to talk about it. It's a very difficult. New York is not a landlord-friendly at all jurisdiction.
Right.
So if you're going to get involved in New York, be very careful. It's not something you just kind of walk into, but you've got to understand all of the zoning laws. You've got to understand all the rent control laws. It is difficult to evict people in New York. It's a tenant-friendly jurisdiction. It is not a landlord. But there is absolutely rent control. If you've ever looked at a lease that comes with your rental, it will come in and it will say what the actual fair market value is of it and what it's actually being rented for. And there's a whole thing that goes on with how they figure out what actual maximum rental is. And you'll see, well, the maximum rental for this is actually $8,000, but because right now we're going to give it to you for $4,000. I'm not the expert on rentals in New York. I'm not going to go any further on it because that's not my area of expertise. Mine is more on the development side.
We know that rent control has a long time history in certain parts of New York City. And Beth, we talk generally about cash flowing real estate on this show, where you can buy a long-term rental with an 80% loan and have your income exceed your expenses. Of course, that's not the core of what we're talking about in this episode, but I should ask, is there any niche that a real estate investor can exploit in New York City, specifically Manhattan, and perhaps something that I'm not thinking of, whether that be a short-term strategy or something else? Like, where can an investor make income today in New York?
So I think where people could make income, and it's difficult because of jurisdictional laws and building laws. So because if you're in a cooperative or a condominium building, most of them are going to have some types of restrictions as far as occupancy and use of the building. But where you do see where people are able to make money is certainly with short-term rentals and the Airbnbs inside of the building. And so that they're being able to go, because it's nightly rental versus monthly rentals, they go in and they will take control of an apartment without owning it and then release it out through Airbnb. And they'll do that either above or below the board. So either, being clear that they're doing that or being not clear that they're doing that. And so there's certainly a way to arbitrage the difference between renting an apartment for $4,000 a night and then putting it on Airbnb and getting $200 a night and being able to get 30, if it's full, being able to get to 6,000 or more. So there's one way to be able to go do it. Now, again, you have to be careful about building bylaws, and you will probably not have many friends in that building itself. Trust me. So if you're in an apartment or a condominium unit and you've converted to Airbnb, most of your tenants who are there or most of your neighbors will probably not be very happy when you go put the key code door lock on your exterior door.
A subleasing strategy that may or may not be in accordance with the rules. That just gives you some idea of how it's pretty difficult to find cash flow in New York City for everyday people. Beth, as we're winding down here, is there any last nuance about New York City real estate, maybe that I didn't bring up, that's of interest that you don't see elsewhere in the nation?
It's an incredibly difficult place to do development, but it is a place where you can make a lot of money doing what you're going to go do. But I think the complexities of New York and developing in New York is probably unparalleled in the world. And so it's probably up there with Tokyo and London and et cetera. So when you think about the trade unions and you think about the municipality and the rules and you think about, there is an interesting place to go look, though, is that wherever the government goes, I've always found that bifurcates winners and losers. And so whenever it's starting to jurisdict and make jurisdictional zoning areas, that's a place to go look, which is like there is very interesting tax incentives that are available for affordable housing and different things that they're looking to promote. And they're the local zoning code is being sympathetic to and wanting to encourage certain types of development. And so there are tax credits available, different long-term property tax advantages that are available. And so if somebody is really looking at it, I would suggest that they go look at the niche markets that the government is carving out and saying, here's where we want to incentivize you to go do something. And that might be a way, if that is something that you as a developer want to go do and have a heart to go do, there may be specific opportunities because the government is steering development into a particular product type or a particular area. And so that might be a place to go take a look at, as opposed to just conventional development or conventional real estate in the municipality.
Well, to me, Beth, this has been super interesting to learn about. There are so many New York City real estate nuances that you rarely find anywhere else. Personally, it's too much of an investor jungle for me to want to navigate. It's too tall of a hurdle to leap over versus some of these shorter ones in our classic parts of the nation where we invest, which tends to be in the United States, Midwest and South. In closing, what are you up to these days? And is there anything that you're working on?
I listen to your podcast every week and I've watched it. How long have you been doing your podcast, Keith?
Since 2014.
My goodness. Because I was going to say it was almost 10 years because I remember meeting you just when you had met you and your wife and that you had just started it. So congratulations to you. If I have something that I can share with your listeners that's worthy, that could interest people, then I'm happy to go do that right now. We're in our 6th year of operation of one of the largest hotels in the country of Belize. It's an adventure. So it's not only do you develop it, but then you own and operate it. So, it comes with a lot of work and a lot of joyful work in operating a hotel. But I'm also at the same time working on some residential developments in the Carolinas, which I think it's got a very robust North Carolina, the Triangle. There's a lot of employment going in that area. So working on some residential projects down in the Carolinas that I'm working on.
Well, Beth, just like our audience, I am smarter for having talked to you and listened to you for a while here. Thanks so much for coming back onto the show.
Thank you so much, Keith. And I wish you and I wish all of your listeners all the best of luck. Thank you.
Yeah, great stuff from Beth there. And hey, a good investment to the global elite, that might be different than what you perceive as a good investment. If you've got $250 million to place and you don't need the cash flow, you just want real estate for the proven inflation hedge that it is, then yeah, drop it all into a Manhattan skinny skyscraper and leave it vacant for 5 years. Some people can afford to do that. Hey, well, it was good to learn that the term air rights is misleading. It's really about development rights. It's probably a better way to remember it as development rights rather than air rights. Now, when it comes to investing in real estate in this region of the country, the Northeast, Boston, New York City, and Washington, D.C. real estate and their outlying areas, they're not really known as what we would call cash flow markets. That's exceedingly difficult to find there if it exists at all. But there are 3 other cities in that region, Philadelphia, Pittsburgh, and Baltimore. And our mid-Atlantic provider there, he even sees properties where the price is around 100 months rent. Yeah, the property price is only 100 times the monthly rent amount. That is impressive. So that means with just a 20% down payment that you would make on these properties, you can expect your monthly rent income to often exceed all the monthly expenses, even your mortgage payment. Well, I'm going to discuss this at a live event on Thursday night, just 3 days from now. That is Thursday, February 23rd at 9 p.m. Eastern, 5 p.m. Pacific. Yes, this live event, this is your opportunity to ask us questions, ask me questions live. And this is special because it's also going to be the first time ever that our in-house investment coach, Naresh, and I are both there together to help you, to answer your questions. And we're going to be along with the provider in these mid-Atlantic markets. And again, it will be in just 3 days, Thursday, February 23rd at 9 p.m. Eastern, and it is completely free. Sign up now at grewebinars.com. The nation's capital, Washington, D.C., has a strong influence beyond the mid-Atlantic region. And the government never goes out of business. They're always going to be providing jobs to people that live in that area. Well, the Baltimore metro area is sort of slowly merging with the DC metro, and droves of Americans work in DC and live in Baltimore. It's a short commute, and it offers more space and more affordability. And then with Pennsylvania being my home state, Philadelphia and Pittsburgh have some similar advantages. So we're talking about things like diverse economies, advantageous geographies, a reasonable cost of living, and then they are substantially more landlord-friendly to you than New York City. So yes, GRE is hosting a live show on these markets. And typically on these action-oriented live events, we have a few real property addresses of freshly rehabbed properties with tenants already placed by the time that you buy it, property management already in place at the time you buy it, if you so choose to have a manager. And we're going to make it real with actual addresses. And you could even reserve a few properties if you so choose, if you're not going to get into the skinny skyscraper. So tune in and don't miss the professional turnkey provider introduction. We'll have a market talk about Philly, Baltimore, and Pittsburgh, and we're going to look at that active inventory. Hey, special thanks to the extraordinarily knowledgeable Beth Clifford today. I hope and I'm looking forward to seeing you on Thursday night for some of the best ratios, rental properties with a high rent income in proportion to a low purchase price. And rather than $250 million, it'll take as little as about $30K for a down payment and closing costs on some of these properties at Thursday's live event. Amidst this continued scarce supply of inventory in America, we have pulled some strings and found a good selection for you in Baltimore, Philly, and Pittsburgh. This GRE live event takes place Thursday, February 23rd at 9 p.m. Eastern. Watch and participate from the comfort of your own home. I'll see you there. It's free, it's interesting, and it promises to be lucrative for you. Sign up now while it's on your mind at grewebinars.com. Until then, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.